The June stats are in the books. We are halfway through 2023 and now we are thinking about the next 2 quarters. Time is flying. Hi, I'm Jessica Genung with the Genung team. Welcome if you are new here and welcome back if you are not. In my last couple of videos titled, "Is Now a Good Time to Buy?" and Bidding Wars Are Back, we talked a lot about what is going on with the broader economy and interest rates. Unfortunately for buyers, as of the making of this video in the first week of July, the consensus in the mortgage and real estate market is that the Fed really is going to stick to their plan to raise rates once or twice more this year, which is a bummer. There was a lot of optimism in the industry leading up to the last Fed meeting where we saw the first rate freeze after 10 consecutive increases. That optimism has cooled as more economic data comes out to support the Fed in the plan to continue the attack on pesky inflation with at least 1 or 2 more rate increases this year. Just today, the latest data on jobs seems to reinforce the plan of Chairman Powell and the Fed to continue increasing rates, and the market has responded with mortgage interest rates moving higher already in anticipation of another federal funds rate hike. The hopes of rate cuts has evaporated as of now for the near term. Even if rates come down a bit to be in the low to mid 6% range, this means monthly payments still sit uncomfortably high for most people. Many in the media and analysts are forecasting the status quo or increasing the rates going forward. Let's hope and pray that we don't cross too deep into the 7s now, or if we do, let's hope that it's not for too long. You might think the higher rates would tame housing prices, but due to the very low inventory, the prices have actually been increasing over the spring buying season and not just in our area. Check out this Redfin headline. The average U.S. home is selling above its asking price for the first time in nearly a year. This is the first time since last August the average sale-to-list ratio has surpassed 100%. Low inventory and steady demand are buoying home prices. This is what we're seeing here in our local market as well. Prices continue to increase in the Temecula Valley in June, which is consistent with our last update. Menifee's median sales price went up a whopping 5.6% to $588,000, which made year-over-year home price positive for the first time. Keep in mind, as always, the numbers that we analyze every month are for single-family homes only for simplicity, and we are looking at the cities of Menifee, Murrieta, and Temecula. Murrieta's median sales price decreased 2.3% in June to $684,000, but this is only negative because in May, the month prior, Murrieta's sales price increased a crazy 8.1%. So the sales price is just settling back down a little bit. But make no mistake that the home prices in Murrieta are definitely on an upward trend. Temecula's median price increased 2.8% in June to $740,000, which interestingly is the exact number from 1 year ago. People always ask me, what is the difference between Temecula and Murrieta? And one of the differences is price. In June, Temecula was $56,000 more expensive than Murrieta, and this has been pretty consistent over the years. Real quick, if you are finding this information helpful, we would really appreciate it if you would hit that like button and consider subscribing to our channel. We put out a new video every week telling you all about the Temecula Valley and what it's like to live here. We have some resources down below in the description for you. You could sign up for our weekly newsletter, and we have a free relocation guide as well that's available for immediate download. Let's take a look at closed sales, starting with Menifee. And year over year, it's down across the board, so I'm not even going to touch on that. The sales volume is way down year over year. But month over month in Menifee, we are down 2.2%, so just down a little bit. Murrieta is down 11.3% month over month, so a little bit bigger of a decrease of sales in Murrieta. And finally, let's look at Temecula is the anomaly, and that's the only city where the number of closed sales went up, and it went up 16.2%, which is a large percentage, but that is only, looks like 17 homes. So, and again, like I mentioned, just down year over year across the board. Median days on market across all 3 cities is on a downward trend. So let's start with Menifee. We're down 2 days on market from 15 days in May to 13 in June. And we are kind of getting back down to the crazy days. In fact, Temecula, we're going to get there. It's going to be in the single digits for the first time. So, but we'll go next to Murrieta. This is kind of an interesting slide, kind of cute. cute, all 11s. So month over month, no change. It's staying steady, but 11 days on market for the median time to sell a home in Murrieta, historically very, very low. Not all-time lows where we were down, 6-7 days on market a year ago. But 11 days is very quick to sell a home. Moving on to Temecula, continuing the downward trend. So in May, it took 11 days to sell a home, and in June, it's taking 9 days. So a 2-day decrease. So homes are flying quick, and this is consistent with why we're seeing prices increase. Normally when days on market are decreasing, buyers, it's showing buyer motivation that they're having to move quicker. So it's natural that prices are going up while time to sell is going down. Okay, moving on to number of listings, our inventory, starting with Menifee, and this is actually quite consistent across the board of the 3 cities. So number of listings month over month is up across all cities. And again, year over year, number of listings is way down. So I'm not even going to touch on that because that's very consistently down 40 or 50% versus last year. But month over month, we've got a few more listings in Menifee. We're up 5.8%. Moving on to Murrieta, same story. We're up just a little bit, 2.7%. It's only 5 homes, so not a whole lot of news there. Lastly, we're going to look at Temecula, and it is up a little bit as well, 6.2%. That's only 11 homes, it looks like. So inventory is kind of creeping up is a good sign. That's going in the direction that I would like it to go in. We talked about this in my last video, addressing the common question that I get about if now is a good time to buy a home or not. The reason for such low number of listings that we just discussed is the historically low interest rates that homeowners currently have locked in. Nearly 92% of homeowners with a mortgage have rates below 6%, and over 82% have rates below 5%, 62% have rates below 4%, and a quarter of mortgage holders have rates below 3%. These low rates have resulted in sellers hesitating to list their homes. My opinion is that when rates come down, we can expect more sellers to enter the market that are looking to upsize or downsize or relocate. That's it for today. Let us know what you think down below in the description. When are we going to get more inventory? Would love to know what you think. See you next week. Bye.